Hi everyone, welcome back to the FAR classes for ASC 606. Yes, you heard it right. So now this one is part 2 of revenue recognition ASC 606. In this particular video, I'll be walking you through the 5-step model and then we'll jump into the detail of step 1, that is identification of contract with customer. So let's dive into to understand more in detail.
Before we went on a break, we have seen like complete overview of the revenue recognition standard, which is ASC 606. Right? In this, we understood like why this new 606 was required and what all it has superseded. We understood what is in scope, what is out of scope, what are the objectives. Then we discuss high level about all the 5 steps, right? And then lastly, we discuss about some other topic which is being covered in ASC 606, including contract cost, breakage concept, disclosure, exception to the disclosure for non-issuer, and then some special item. Now we are jumping into the very first step of the 5-step model of revenue recognition, that is called identification of the contract with customer. Right? So first and foremost thing, to identify the contract, what we need to understand whether an agreement is a contract or not. I know some of you might have studied in your college days or maybe in your professional education about the Contract Act, but let me reiterate what all things are being mandatory for an agreement to consider that as a contract. First one is there must be an offer and acceptance of that offer, right? For example, like if you go to the McD's, right? How many of you been to the McD's or KFC? You guys been there? Come on.
Yes, sir.
Yeah.
Yes, sir.
So what do you see over there? The big board, right? And that big board, there are McVeggie meal, Mac non-veg, and so on and so forth. All those items would be looked at there, right? Same way, like you go to the Starbucks, right? Or maybe like KFC. You see on the big board, there are so many products lying over there and their prices are also listed over there. And then you go to the counter and you say, I want, let's say, McVeggie meal. I want cheeseburger. I want, like chicken burger, so on and so forth, right? And then they give you the bill and you make the payment, right? So here is the thing. So what is an offer over here? The board which you have seen, right? In the McD's, KFC, Starbucks, you have seen like big board in which it has been listed down what all products they have. Or maybe when you go to the restaurant, the menu card, right? Why in the menu card they put the pricing? Because that is considered as an offering from that restaurant, right? And what you order is your acceptance to those offers, right? You see the price, then only you order, isn't it? Yes, no?
Yes, sir.
Right? So the offer is their board, their menu card, right? And then your acceptance is ordering of that particular item, right? Here, couple of things you need to keep in mind, like offer can be in writing, right? Or it can be like verbal, or it can be, like the boards, boarding, menu card, right? Or it can be, like customary practice of industry, right? And acceptance is where you are accepting the terms and condition of that particular offer, right? When offer met with the acceptance, then that particular agreement generate. But an agreement to be a contract, there are few things also which must also be there. One is the competency of both the party. If both the party are competent to do the contract or not, whether the contract, the person who is entering into a contract is a minor, is a major, is in sound mind or is in unsound mind, is it in some undue pressure, right? Those all things you need to keep in mind to understand whether the person who is entering into a contract is competent to do that contract or not. Second important thing is free consent. So free consent means should not be any undue influence, should not be under any influence, should be taking that arrangement, getting into an agreement with the free mind. Then enforceable right and obligation of the contract. For example, if you can go to the bookshop and you order a book and you have paid for it. So what is your right? To get that book which you have ordered and for which you have paid, and what is the obligation of the person who has received the money to deliver you the right book which you have ordered, right? So enforceability should be there in the contract. And the most important thing is lawful consideration. So the contract, an agreement, to be a contract, there must be a commercial substance. If there is no commercial, then that's just an agreement. That is not a contract. Right? There are like many agreement which are not contract, just an agreement or just an MOU, because they do not have any commercial terms and conditions. Right? To be an agreement to a contract, there must be a commercial substance or commercial terms and condition and the payment terms and conditions. Right? And then there should be a lawful objective. It should not be any for illegal purpose, right? For example, you cannot say like shoot anyone and I'll pay you, and that person cannot legally sue you even though if he or she has done that act, right? Because that is illegal act, right? That is not a lawful act. So on a contract, to be a contract, must be having a commercial substance and the legal act, lawful act. It should not be for any illegal act or unlawful act, right? And then it is probable that the entity will collect the consideration to which it is entitled in exchange of the goods and services. So to be a contract, couple of things you need to keep in mind. I just quickly reiterate. One, there should be an offer. And the second important thing, the person should have accepted that offer, right? So for example, like maybe if you can tell me like what all kind of organization you are working. Let's say some of you are working in a software company, right? Prashant, you are working in a software company. In that case, how this offer, acceptance, agreement, and contract has been done. So if you see, initially you may have your marketing team or business development team, right? They might be reaching out to the customer for any new software development. Right?
Yes,
At that point of time, they will be sharing the details, what all your company is doing and what all capabilities we have and what all past experiences we have, right? And then they will be understanding the requirement of the customer, right? So once you understand the requirement of the customer, then it comes to the technical people to do the estimation, right? They will be doing a technical evaluation and technical estimation that how much time they would be required for the staff, senior, assistant manager, senior manager, partner, right? That's how they might be calculating like how much time would be required to complete this project. And then it may be going to the commercial, right? Then commercial team would be adding the value. So that value will be the employee cost, overhead, and the markup, right? And then they will be reaching out to certain price. Let's assume I have to develop a software, right? And Prashant, you have a company who is developing the software and you have reached out to me and finally you have given me an offer that I can develop this software for your company at, let's assume $100,000, right? And then what I will do, I'll take that offer, right? And then for the same configuration and the same requirement, I'll be reaching out to 2 or 3 more vendors. So understanding what you are charging, what you are offering is legitimate, reasonable or not, right? Then I'll take the quotation from other vendors also. Then I'll do the comparison, right? About the costing, about the quality, about the timing, and most importantly, to whom I can trust for it. Right? And then let's assume I have come to you that this $100,000 dollar is very high amount. In the market, people are taking 70,000, people are taking 75,000, people are taking 80,000. And I give you a counter offer, right, for $75,000 instead of $100,000, right? So initially you have given me offer for $100,000, right? Rather than accepting that offer, I have given you a counter offer for how much? $75,000, right? And now it's on you. You will do the math at the back end. You will see where you can cut the corners, where you can reduce the time and energy of the senior people. I know like staff and senior might not be very expensive, but manager, senior manager and partner level time is very expensive, right? And then you will see like how can you how much margins you can reduce, and then you'll do your economics, and then you say like I accept this offer. And then that acceptance of offer for $75,000, which is a commercial substance, right, is a contract. So initially you have given me offer, I did the validation of the offer, and rather than accepting that offer upfront, I have given you a counter offer, and to that counter offer you have accepted, and now it's a contract, right? For that, we'll be signing up a contract where we'll be writing the milestones and the payment terms. Yes, am I going right, Prashant? That's how you do.
Yes, sir. Yes, sir.
Right? So then we agree on the milestone, like you will develop a designing part within 30 days. And once designing is complete and approved, I'll pay you $10,000. Then you will do, first phase prototype development. And then once prototype is being approved, then I'll pay you another $15,000. Right? Then there is 3 phases of development. On each phase of development, I'll pay you 15,000 each, and I'll retain $5,000 at end, which I'll pay you after 6 months of implementation. Right? That's how generally like payment terms are being agreed. Right,
Yes,
Prashant?
sir. Yes, yes, sir.
So now the payment terms are being agreed and the milestones has been agreed. So on each milestone, we'll be paying you this money, right? That's how this contract, why this contract is actually a contract. The reason being, if you see all the points which has been listed over here, there is an offer and acceptance, right? So it's an agreement. Both the party are competent. We both are majors and we both are sound-minded people, and we both know the market situation, right? And there is no pressure. I have done my own independent evaluation. I have done like my quotation analysis, and completely with the free consent I shared with the Prashant, and Prashant has agreed to it, right? So now once we entered into this agreement, then I have given an advance to Prashant, right? And Prashant have to develop the designing part and show it to me for the approval. So I have enforceable right, right? Once I paid the advance to Prashant, I have enforceable right to show me the design within 30 days, which we have agreed. And the Prashant has obligation to do that, right? And then the consideration, if you see, is a lawful consideration. I'm not asking Prashant to murder anyone and get this work done. I'm not asking Prashant to, like push anyone so hard that the person can get die, right? So I'm not doing any unethical practice or illegal practice, right? It's a lawful consideration for which, like, I'm paying to the Prashant, and Prashant and his team would be working. And it is very much probable from the Prashant standpoint of view that amount will be collected from Kamal. So now, who will be recognizing the revenue? Prashant or Kamal?
Prashant.
I know you, but I wanted to understand from other. Yeah, Pranjali, Aditi, Kashish, who will be recognizing the revenue?
Prashant.
Why? Why? Pranjali, Aditi, Ananya, are you guys here? Santrupti, Vineet.
Yes, we are here.
So what was my question?
Your question is who will be recognizing the revenue?
Yes,
And you are
Kamal
asking
or
like why
Prashant?
is it Prashant?
Yes, Kamal or Prashant?
Yeah, like someone said it's Prashant and you are asking like why is it Prashant?
But what is your view? Is it Kamal who need to recognize the revenue? Is it Prashant who need to recognize the revenue?
I would go with Prashant, like Prashant should recognize the revenue.
But why? $1 million question. Yep. What's up? Vineet, Pranjali, Ananya. Is it so difficult? Okay, Prashant, do you want to reveal why you want to recognize the revenue?
Because I am delivering the services.
Yeah. Got it? Has everyone got it? Because Prashant is delivering services, right? So he is delivering services, so he will be selling, right? So the person who is selling will recognize the revenue, and I'm buying it. For me, it is purchases or maybe capital expenditure. I'll recognize software as asset. Make sense? We all are commerce student, I know. Are we all commerce student, right?
Yes.
So we have done 11th standard for sure, I think. All the
Yes,
debit and credit rules, probably we do. That's my assumption. I may be wrong. Okay, so far we understood what is contract and why this example which we have discussed is a legal contract. Everyone got it? Yeah, Pranjali, Aditi?
Yes.
sir.
Got it. Okay, so next point here is it is not necessary to be in writing. So it can be verbal, it can be industry practice also. Like same example which we have discussed earlier about KFC, McDonald's, Starbucks, right? There you just go and order, right? It's a verbal, but it is binding on both. It's not necessary to be in writing all the time, right? Next point is collectibility threshold. Entity must determine whether a customer has the ability and intent to pay the promised consideration in exchange of the goods and services. So ability and intent is the key point here. The person with whom you are entering into an agreement, for example, like Prashant and my case, which we are discussing, right? Prashant is entering into an agreement with me for $75,000. Do I have ability to pay $75,000 or am I a bankrupt? If I am a bankrupt, what will you recognize? What is the value of that contract if I'm a bankrupt? Right? If I do not have ability, then it does not make any sense to enter into a contract with me because I won't be able to pay anything. Make sense?
Yes.
And second thing is, if I have no intention to pay, then how can you recognize? Or why would you enter into an agreement with me? Right? For example, if I'm a minister, right, and Prashant has entered into a contract with me, but I have no intention at all to pay him. And that Prashant also know very well. He the minister ka ladka, he will not pay. So then why would Prashant would come and enter into a contract with me? And if for any reason he entered into a contract with me, then whether he will recognize the revenue when he know I have no intention to pay. How many of you live in Delhi NCR area? I think Kashish is here. Aditi, where do you live?
Kurukshetra, Haryana.
Kurukshetra. Pranjali, you are in Ludhiana. Okay, and who else is here? Have you ever seen this ambience mall? Any of you have heard about it?
Yes, sir.
Sansuti, Ananya, right? Do you know like who is the investor of this ambience mall?
Sir, DLF, I guess.
Ashok Gehlot.
Okay.
So I was doing like audit of the company called Blue Star Electromechanical. Have you heard about Blue Star brand?
Yes.
Right. So they have like a subsidiary called Blue Star Electromechanical, and they have done all the firefighting, electricity, and plumbing job over here, which was like worth 12 crore of money, and they got nothing out of it. They got nothing out of it. So whether they should recognize the revenue when it is minister project and minister has no intention to pay. If the person has no ability to pay and no intention to pay, then you won't be able to recognize it, right? So collectability is the most important thing in any contract to consider for the revenue recognition, right? So how you measure the collectability? The ability of the customer to pay and the intent to pay, right? In US, when they entered into any contract, they look at your credit score first. They look at your social security number first, right? And do you know this?
सर सोशल सिक्योरिटी का भी वहां पे अलग से वो होता ना
Yeah.
स्कोर टाइप की हाँ कितना इवैल्यूएशन करके फिर उसी में इवैल्यूएट करते हैं कि वेदर यू आर credible
Yes.
enough
Yes. Yes.
as well as other things.
Yes. So that's how they can easily identify the risk and collectability. And if it is within the manageable risk rating, then they will go for it. If it is not within that manageable risk credit rating, then they will not give you anything on credit. Then everything would be on cash basis to enter into a contract. For example, let's say I'll give my example only. Back in 2018, EY has shifted me to the US, right? I went there to purchase a car and no one was giving me any single penny of credit because I just landed in United States of America. I have no background and no history of credit. You know, I purchased the car on down payment cash at zero credit. Because no one is allowing me, despite of the fact I have like offer letter of the EY and I am working with the EY on a work visa. Despite of that fact, no car company was giving me any single penny of credit. Right? So collectability for any contract is very important. So an entity should only recognize any consideration it receives as a revenue when either the entity has no remaining obligation to transfer the goods or services to the consumer, and substantially all the consideration has been received by the entity and it is non-refundable, or the agreement has been terminated and the consideration is non-refundable. So this is another point. So first we understood collectability, right? So collectability is important for any contract. For collectability, two checks need to be done. First is ability to pay. Second is intention to pay, right? Now, another thing is the recognition of revenue. When an entity should consider any consideration to recognize the revenue upfront. First point is when the entity has no remaining performance obligation to transfer the goods or services to the customer, or substantially all the consideration has been received by the entity and it is non-refundable. So what does it mean? It says, let's assume this car example. Let's take that car example. In the car example, you are purchasing a car from Mercedes-Benz, that S-Class Mercedes, for $100,000, right? Along with that $100,000 of car, they give you 1 year warranty also, right? do they recognize entire $100,000 as a revenue, or do they allocate certain amount as a warranty income and that warranty income to be recognized over the 12 months? How it should be? The practical experience says, the past experience of the industry, that warranty expenditure is less than 0.005%. If they sell 100,000 cars, only 50 cars or 5 cars come for a warranty claim. So there is no major expenditure which company need to incur at least in very first year on the warranty. So the practical experience said they have already transferred the car and there is no remaining performance obligation, or substantially they have transferred the performance obligation, right? Hence they can recognize the revenue. Second thing is the agreement has been terminated and consideration is non-refundable. Like, how many of you purchased the flight ticket from Make My Trip, Yatra.com? Have you guys 𝐂𝐨𝐷𝐿? Have you guys purchased any ticket from them?
Yes, sir.
Right? And for any reason, if you have to cancel that ticket, how much refund you receive?
Sir, it depends. Like if we are taking it for refundable part, then we will get it.
No, two
Other than
things.
taxes, then we will
Like
get
for example, if you are purchasing a flight ticket, let's say from Delhi to Mumbai, from Make My Trip, let's assume the price was 8,000 rupees, right? In 8,000 rupees, if you see the breakup of, let's say, 7,000 rupees go to the airline and 1,000 rupees is a convenience fee charged by Make My Trip, let's assume, right? In that 7,000, there is further breakup of refundable and non-refundable amount. Let's assume refundable amount is 2,000 rupees. And if you are canceling that ticket or changing that ticket, how much money you will be receiving out of 8,000?
2,000 plus taxes.
2,000 plus taxes, right? Or if the ticket is non-refundable. Generally, if you see, the lower price tickets are non-refundable, right? Have you ever observed this when you are booking the flights?
Yes, sir. Yes.
Right? What is the reason? What is the reason of that?
Sir, they are actually, the cost is actually lower. So they will have to make profit out of it, no? Even if we are canceling it.
No. The reason being, the airline industry history of transaction says on an average 15 to 18% people do the cancellation. And if you give them the non-refundable tickets, that means you are any which ways earning 15 to 18%. And people feel it lucrative to buy, and more people buy at less price. And then the churn rate increased from 15 to 18% to 20 to 24%. You know how they are making fool to each one of us by saying non-refundable. Now that's a business. But now coming to this revenue recognition standard. Look at the second line. The agreement has been terminated and the consideration is non-refundable. For example, if you have purchased a non-refundable ticket and you are canceling it, you'll not get any refund because it's a non-refundable ticket, right? So entire money you can recognize the revenue even though passenger has traveled or not. Does not make any difference to the travel agency as well as to the airline. Make sense? Now it makes sense. The second point, the agreement has been terminated and the consideration is non-refundable.
Yes.
So look at the note, last point. An entity should recognize any consideration received from the customer as a liability until all of the above criteria are met. If you cannot recognize the revenue right now upfront, then and you have received the money, so then that money is advance from customer. And where do you show advance from customer? In the current liability. Make sense? For example, like in our example, like Prashant and Kamal's contract. Let's say Kamal has given $5,000 advance to Prashant. So this $5,000 in the books of Prashant, would he recognize the revenue or would it be advance from customer? Until the Prashant do the designing part of the work. So is it advance or it is sale? Do you remember what was the example we have discussed about the software development? Kashish, Aditi, Pranjali. Do you guys remember the example which we have discussed about software development project? Yes, no, कुछ तो बोल दो. My God, it's difficult. If you don't respond anything, what should I assume? Vineet, Santrupti, Ananya.
Yes, sir.
So what was the example?
Which one? The software Prashant, which was sold by him.
So if I have given $5,000 as advance payment to Prashant to start developing designing part of the software. So will Prashant recognize that $5,000 as revenue, or will Prashant recognize that as a liability advance from customer?
So at the initial stage, it will be considered as a liability, but once the project and once the services has been done, then it will be considered as a contract.
Absolutely right. Absolutely right. At initial point, when I pay $5,000 to Prashant, Prashant will recognize that as advance from customer as a current liability. As and when Prashant develop the designing part and deliver it to Kamal, then he can raise the invoice and convert that advance into sales. Transfer that amount from advance to sales. So, for example, you have purchased, you have paid an insurance premium. Let's assume you are an insurance company, right? Let's assume you are a which company? Insurance company, right? And let's assume you are an insurance company and you have received, let's assume $12,000 as insurance premium from a customer. On 1st January 2023, you have received $12,000 as insurance premium from a customer, right? Whether you will be recognizing the revenue on 1st January itself, or you will be recognizing advance from customer on 1st January when you receive $12,000. For example, you are an insurance company and I am an individual. I have paid $12,000 to you on 1st January 2023. In your books, do you consider this as advance from customer or revenue from customer?
It's unearned revenue, like advance from customer.
Advance from customer?
Yes,
right?
sir.
Santrupti, Ananya, Pranjali?
Advance.
Advance from customer, okay. And on 31st of January, you have rendered the service for 1 month, right? On 31st of January, will you release certain amount from advance and transfer it to sales or not? As you have rendered 1 month services. Yes, no.
Yes, sir.
Pranjali, Vineet,
Yes, sir.
Yes, sir.
right? Because you have given a 1 month service. Okay, if I simplify, if you feel like insurance is a big company, you cannot, you're not comfortable assuming yourself as an insurance company. Let's assume you are an AMC provider for the laptop, right? I am a small company and I have 10 laptops for which I have paid you, let's assume $12,000 AMC for the year. So after 1 month, so at the time when I pay you 12,000, you have recognized that amount as advance. After 1 month, will you release some amount from this advance to recognize the revenue? Yes or no?
Yes.
Yes.
Yeah.
Right. So how you will do the accounting? If you look at this journal entry example, so when I paid you $12,000, at that point of time, you will be recognizing cash account debit to advance from customer. So the simple fundamental, debit what comes in, credit what goes out. Hope you remember, right?
Yes, sir.
So what is coming in? Cash of how much? $12,000.
Yes, sir.
Right? And it is a liability that is expected to be going out in future to advance from customer, that is credit. After the month end, on 31st of January, you will be raising an invoice for the month of January and recognizing the revenue of $1,000, right? So account receivable debit with $1,000 and sales will be credited with $1,000. That's how you make the sales entry. Yes, no?
Yes, sir.
Right? Now you have already received money in advance. You are not going to receive the money again from the customer. So you need to settle the advance against the account receivable, right? So you will be releasing account receivable by debiting account receivable and adjusting the same amount by crediting the account receivable of $1,000, $1,000. So now at the end of the month, you have advance from customer $11,000 and you have revenue of $1,000. Make sense? Yes, no?
Yes, sir.
Yes.
Right? So this is how you need to recognize the revenue when you start providing the services. But until you start providing the services, the money you have received is a current liability, that is advance from customer or unearned revenue. Make sense? Now we are jumping on to the next topic, which is portfolio approach. So like we discussed before the break, what is portfolio approach is when there is a homogeneous activity like mobile network service provider, internet provider, cell phone service provider, laptop AMC provider, courier services provider, right? They all provide like similar kind of services, right? So for them, rather than evaluating each and individual contract, it's better to evaluate one standard contract and make a principle of accounting of all those portfolio contracts, right? So for example, let's assume like AT&T. Like AT&T, one of the biggest network provider in the United States of America. AT&T provide cellular services, that is like mobile network services. They also provide internet services, broadband services. They also provide dish TV services, right? So for each kind of services, they have a very much standardized packages. So rather than evaluating of all, 10 million or 15 million, 20 million user contract, it is better to evaluate one mobile network contract, one internet or broadband service contract, one dish TV contract, one bundle contract, and different combination and permutation they have for the respective services, right? and accordingly categorize that each contract of that much value should be evaluated in a same fashion and recognize the revenue in a very much same fashion. That is called portfolio approach for recognition of revenue of homogeneous activity or homogeneous contract. Right? For example, you are a company who provide AMC of refrigerator, air condition, or maybe the laptop or the washing machine. So what you are a AMC provider for washing machine, refrigerator, and laptop. So for you, there are three type of contract, three category of contract: washing machine AMC, refrigerator AMC, or air condition AMC, right? So if you evaluated these three master contract and everyone is paying according to these contract only, then you are not required to evaluate each and every customer agreement, right? You can consider those agreement as a portfolio approach. So instead of considering and evaluating the contract with individual customer, an entity can take a portfolio approach to recognize the revenue either at point in time or over the period of time. An entity may apply revenue recognition guidance to the portfolio contract or performance obligation with similar characteristics if the entity reasonably expect that the effect on the financial statement of applying this guidance to individual contract within the portfolio is same. Make sense? What is portfolio approach? Any doubt or any example you would like to share to discuss in the group, whether that example is fit into portfolio approach or not fit into portfolio approach? Oh my God, you guys have a heavy breakfast. Huh? Any example coming in your mind which you want to discuss with the group?
Thinking so.
Okay, so let's jump into the next topic, which is called combining contract. Combining contract are those contracts you can combine together which entered into at or near the same time with the same customer or related party of the customer and account for the contract as a single contract if one or more of the following criteria are met. So when you entered into a contract with the same party or related party at the same time or near about the same time, there are most likely probability that those contracts have been negotiated together and have interrelation. So it should be evaluated together. So what are the criteria? If those criteria are meeting, then you can combine those contracts. First one is the contract are negotiated as a package with a single commercial objective. For example, when you are purchasing a car, the extended warranty they have offered you and you have considered it and you have taken an additional discount. Now, if you see the substance over form, even though you have two contracts, but you have negotiated both the contract together and for the usage it together, right? If you have purchased like a printer and on that they have given you cartridge free or maybe at discounted price, right? That means it shows that you have negotiated printer and cartridge together and you have got some additional discount on the respective item. Hence, the printer and cartridge, even though there are two separate agreements, you need to consider that as a one agreement, even though in that agreement the performance obligation would be different. So don't mix the contract with the performance obligation, right? Here we are discussing combination of contract, not the performance obligation. That we will discuss in step 2 when you can combine performance obligation. That is part of step 2. But in step 1, we are still at contract phase. The step 1 is identification of contract. Second is the amount of consideration to be paid in one contract depend on the price or performance of another contract. For example, you entered into a contract to purchase any particular item, and that amount is substantially less, but you are compensating the customer or the vendor with buying another product at a higher price. So in that case of scenario, both the contracts need to be evaluated together and considered as a one contract. The reason being, otherwise it will be undue to, or it may be possible that for one contract revenue is high and for another contract it may be a loss making, right? Third is the goods and services promised in the contract are a single performance obligation. For example, flat on rent with maintenance contract. If you take any flat on rent, then maintenance will automatically come into it, right? If you are purchasing a laptop with operating system, or if you're purchasing equipment with installation services, right? So the goods and services in the promise contract are single performance obligation. You cannot use the house without taking maintenance services in the apartment. Same way, the laptop you cannot use without the operating system. So hence, those kind of contract can also be combined together. So there are three categories. One is the contract that are negotiated as a package with a single commercial objective. Second is amount of consideration to be paid in one contract depend on the price and performance on another contract. Third thing, when goods and services are performed in a contract, are a single performance obligation. Make sense? Then you can combine those contract and consider as one contract and evaluate as a one contract. Even though there might be separate performance obligation, never mix the performance obligation to the contract. They both are different things. Make sense?
Yes. So purchasing an asset with an extended warranty can also be considered, right?
Say that again.
So purchasing any asset with an extended warranty can also be considered.
Yes, yes, absolutely. One contract price may have impact on another price. To better evaluate and identify appropriate transaction price of the individual performance obligation. So next topic we have is a contract modification. So far, if you see, we covered two important topics: portfolio approach and combination of contract, right? Third important topic is contract modification. What is a contract modification? Any idea? Any idea what is contract modification?
Or if there is any change in scope, then we can do it. Or any kind of modification required in the particular contract.
Anyone else would like to add? What do you think about contract modification?
Sir, just updating the existing contract.
With what? Just updating the name, address, location.
No, any terms,
Full
new
result.
terms, new terms like you are extending the contract or decreasing the term period or the amount regarding that, adding additional clauses for it.
So modification of contract will happen in three situations: when there is a change in price, right? For example, if you are purchasing any raw material from someone and the prices has changed, even though quantity remains same, but the price of the raw material has changed. Let's assume if you are, let's say, a tire manufacturing company and you are purchasing natural rubber from any vendor. So that natural rubber supplier has increased the price because the raw material prices have increased. So there is no change in quantity, no change in scope, but change in price. So that will result into change in contract or modification in contract. So there might be a possibility that when there is a change in scope, that also be considered as a modification. For example, you entered into a contract with me to supply 50 laptop of Lenovo of any specification or configuration or the models, right? And I need those 50 laptops by tomorrow because my new staff is joining tomorrow morning. And at the time of contract, you said, yes, I will deliver and I have paid the advance to you. But in the afternoon, you got to know that you have 30 laptop of Lenovo of the same configuration and 20 laptop you have for HP. Then you call to me, sir, I have 30 Lenovo laptop and 20 HP laptop. Shall I deliver the same instead of all the 50 Lenovo laptop? All right. If I say yes, then there is a change in scope. That means product has changed, but the price remains the same. Then also it will be considered as a contract modification. Third example, when there is both change in scope as well as change in price. Like an example which we discussed earlier before the break, that you entered into an agreement with the contractor to build stilt plus 4 floor on your piece of land. And in consideration of that, you'll be paying him a floor. Right? Now the new law has been passed and you can extend to 5th floor, right? So you entered into a upgraded contract with the vendor and now you're saying I need 5 floors, right? Whereas I'll pay you consideration of 1 floor, which we agreed. In addition to that, I'll pay you 50 lakh rupees, right? So now there is a change in scope as well as change in price. Make sense? So hence this contract is considered as a modification. So modification could be possible on account of change in price, on account of change in scope, or on account of both. Make sense? Yes, no?
Yes, sir.
Right? So let's look at some example of change in scope, change in price, and both. So if you see first example of change in scope, the original contract to construct a building X and Y after completion of X, parties agreed to construct building Z in place of Y. So there's a change in scope. You said, let's say I have 250 square yard piece of land here in Pune. And you entered into a contract with a contractor to build stilt plus 4 on that piece of land. And luckily, you got a very good buyer for that piece of land, and that piece of land is giving you great income. And you sold that piece of land before start of the work, and immediately you purchase another piece of land nearby. Right? So there is new contract which you are entering into with the same contractor, but changing the space and changing the scope. Right? Next example is change in price. Change in price due to inflation, company A agreed to construct 10-floor building of company B in 2 years. After 1 year and construction of 5 floors due to inflation result into increase in raw material prices and labor prices. So company B negotiated to increase the price even though scope is same. So have you guys made any home ever in your life? Have you constructed any home or shop or building ever in your life? Do you have any experience?
No, sir.
No?
No, sir, not constructed, but given a contract to build a
But yeah, contract also. If you have given a contract, you might be seeing like every 2 months, the contractor come back to you and sit on your head that labor prices are increasing, material prices are increasing, I need escalation. Does it happen with you?
No, sir. It is a very good, we have got a very good builder. So
Lucky you are.
yes. Nothing as no kind of negotiations has been done.
Yeah,
So
lucky you are. But most of the time, if you have not experienced, but any of your family member or relative, I'm sure must have experienced this. Like initially you entered into a contract, but after few months, as and when like work start, they come back to you, they will say like raw material prices are increasing, cement prices are increasing, iron prices are increasing, labor cost is increasing, we need an escalation, and they start crying on you.
but sir,
Right.
before an agreement has been happened, so all the things are already mentioned in that particular thing. No? So there is no kind of negotiation that has been done after that.
Yeah. So it's being like in Delhi, Mumbai, maybe in metro city, it's being very well structured agreement that like everyone do. But if you go to the non-metro cities, it's all like verbally communicated or maybe some week written on the piece of the paper, right? It's not clearly laid down in a formal agreement shape, right? So there is always be a challenge among the contractor and the owner, and most of the time they end up discontinuing that contractor and look at some other contract. It's very normal in this industry, at least in tier 2 and tier 3 city, what I have observed from my experience, right? So that is because of change in scope or change in prices, right? So this is like, these are certain examples. I'm sure there would be a lot of examples. There might be a lot of experience you guys may have, right? So you can correlate those experiences with this theory, which we are understanding here. So if you see contract modification, it results into two things. One is it may result into a separate contract, that is additional contract. For example, which we had discussed like 4-story building, and then the approval came for the 5th story. So there might be a possibility of separate agreement, or there might be a possibility the termination of the existing contract and creation of new contract, right? So contract modification is happen because of change in price, change in scope, or both, right? But what this contract modification result into? It may either result into termination of original contract and entering into a new contract, or additional contract, a new separate agreement or new separate contract in addition to existing contract, right? If it is a separate contract, that is addition to the existing contract, the scope of contract increase because of additional promised goods and services that are distinct. And standalone selling price is available for additional promised goods and services. So hence that contract is called a separate contract. For example, like initial contract you entered into to supply the laptops, addition of AMC for laptop purchase. So AMC of laptop will be a separate contract. For example, if I am a distributor of, let's say, Apple laptops, right? And you have purchased 10 laptops from me for your office, right? So that is one contract. In addition to that, I offer AMCs also, right? And you entered into a separate contract to purchase the AMC, for which I need to give the service over the period of time, right? So then this AMC agreement is considered as a separate agreement because the goods and services are separately identifiable and they have a standalone selling price. Now look at right hand side, the termination of existing contract and creation of new contract, or treated it as a part of existing contract and extension of the existing contract. For example, development of a software with initial blueprint and in middle of the project renegotiated the change in configuration and expansion of the scope to better use the developed software, right? So I'm sure, like Prashant, you are from like software industry, you might have seen this very commonly, right? People initially give the scope of work, right? They entered into an agreement, they do best of their negotiation, but as and when we move forward, we come up with we should have this feature, we should have that feature, we should have this configuration, we should make it more UX, UI, right? Those things. And then in
Yes,
the
sir.
middle of the contract, like the software developer fed up, right? They say, no, I can't work like this. So let's do a renegotiation, right? What all additional feature you want? Give me a list, and then I'll do the estimation, and then we'll renegotiate and then enter into an updated agreement, right? Does that happen normally, Prashant?
Very frequently, sir. It is like
Very frequently, right?
it
So
is the
in the space,
characteristic of software projects.
yes, same as, like if you see in real estate also, like normally the people who make homes, right, the contractor, and if let's say I do not want to show the biasness, but like if the ladies are sitting on the head of the contractor, then he will never finish the home at all. Right, they need like all the time, like this need to improve this way, that need to be improved in that way, or so on and so forth, rather than giving it a list and getting into an agreement. Like some people have tendency to ask, this change, that change, so on and so forth. And then finally, like contractor will one day fed up and say, ma'am, sir, I want like, escalation, or let's do a renegotiation on the entire things which you want to build. Same is with the software industry, right? So that kind of contract is resulted into termination of the original contract and entering into a new contract, or the extension of the original, right? So that's how the treatment would be for the modification of contract. So modification of contract would result into on account of change in price, change in scope, or both. But the result of the modification may be entering into a new separate contract, or termination of original contract and entering into a new contract, or extending the original, right? These are the only possible ways for the resulting into modification. Make sense?
Yes.
Yes. No?
Yes, sir. Yes, sir.
So this is all about step one. Step one is identification of contract with customer. Whether the contract, whether the agreement, whether the communication is a contract or not. First we understand. Second, we understand the amount which we have mentioned in the contract has collectability, or the collectability is probable, right? Third, we understood portfolio approach of the contract. Fourth, we understood combination of contract, what kind of contract can be combined together and evaluated together as a one contract. And then lastly, we discuss about contract modification and how to deal with those modifications. Right? So far, we are done with step one. Any doubt on any of these 5 points?
No, sir, clear.
Yeah. Santrupti, Ananya, Vineet,
Yes.
Anjali, all
Yes.
good?
Yeah.
Yes,
Okay,
sir.
so let me test. So let's do some practice questions before we jump into the next topic. So question for you guys, right? Now you will be speaking and I'll be listening to you. So question for you is, which of the following is correct regarding contract modification under the revenue recognition guidance provided in ASU? What is the call of the question? Contract modification, right? So first option is, a contract modification is a change in scope or price or both of a contract that is approved by the parties to the contract that change the performance period of the contract by at least 1 year. Second is, a contract modification is a change in scope and price or both of a contract that is approved by the parties to the contract that change of the performance obligation of the contract by at least 1 year. Oh, it seems same. Third option is, a contract modification must be approved in a writing by all the parties to the contract in order for the modification to be effective. Does it mandatorily require to be in writing? The fourth is, a contract modification exists when the party to the contract approve a modification that either create a new or change in existing or enforceable right and obligation of the parties to the contract. So which statement out of these four is correct in light of contract modification, which we have just studied?
Fourth one.
Fourth one, why not first and third?
So first one is saying that like it is putting the restrictions that the period will change by 1 year. But I think it is not written anywhere in the revenue recognition that whether the change in scope or change in duration should be at least 1 year or so. There is no reference to the time period.
Yeah, very, very good. So 1 year line is making this option as incorrect, right? Why not third?
Saying that it should be in writing, but I think you have mentioned that like the contract, like we go to the MACD and just pay the money and get the burger. So there is no contract. But if I go again and then say no, I want additional cheese, basically we are not like giving it in writing or so. So that's why the condition here is that it should be in writing. I think it is nowhere mentioned that like a change in contract should be in writing.
Yeah, absolutely true. So it can be verbal communication as well, right? And why fourth is right?
So it is as per the revenue recognition. If like the both parties are agreeing any change, then they can create a new contract. That is one option available. Or they can add or delete the clauses in the existing contract. Or maybe they can change the rights and obligations. Like obligation, maybe like you have to pay more or less.
Change in scope, basically.
Yes.
Yeah, so everyone agree to like the Prashant's explanation, or anyone have different view or would like to add something what Prashant has shared? Vineet?
So firstly, once the contract has been made, so there is no time restriction. And the second one is like it will, get changed if the scope is changed. So we will create a new contract basis on the, requirement of the.
Yeah, first and second are same, I think so. Option.
Yes, sir.
That's just to confuse you. They have two options, but they both are same. So why not third?
So it should not be always in written, but also in verbal communication as well between both the parties.
Yeah, perfect. Absolutely right. Both of you are absolutely right. So hope everyone agree to what Prashant and Kashish said.
Yes.
Yes, sir.
Cool. Next question for you guys. Which of the following is one of the criteria that must met in order to recognize revenue on a contract with customer? First is the party to the contract have approved the contract and are committed to perform their respective obligation. Second is the party to the contract have approved the contract and are committed to perform their respective obligation.
Both are same.
Same sentence.
So maybe some typo error from my side. So just ignore the first option. Let's consider three options we have. So maybe some typo error from my side.
So if you see all the three questions, there are, first and second option are same in all the three questions.
So I know there's some typo error from my side. Okay, just assume three options. I'll remove this option. So it saves some of your time. So I'll before I send this to you, I'll update this, but just for practice for right now, just consider like we have these three options. So which of the following is one of the criteria that must be met in order to recognize the revenue on the contract with customer? First is the party to the contract have approved the contract and are committed to perform their respective obligation. Second is the entity's legal counsel has approved the contract. Third is contract consideration must be paid to the entity within 6 months of the performance of the contract. Which one is right option?
So second and third तो नहीं होगा.
Why?
क्योंकि सर एग्रीमेंट में कोई कॉन्ट्रैक्ट में ऐसा तो है नहीं कि 6 months के अंदर ही आपको सब प्रीपेमेंट वगैरह सब करनी है कॉन्ट्रैक्ट को. सर वो ड्यूरेशन भी बढ़ सकती है डिपेंडिंग अपॉन क्या है.
Agreement between the two parties. Yeah. And why not second?
सर कोई लीगल काउंसिल तो है नहीं कि जो अप्रूव करेगा कॉन्ट्रैक्ट को. ये तो दो पार्टीज के बीच में है ना.
Okay, anyone else would like to add their view? Anyone of you would like to add your views? Why second, third, first, which option is right and why that is right?
So according to me, second, like legal counsel, generally they don't sign the contract. They just review your contract. They will provide the opinion. So basically, the sourcing teams, they generally sign the contract. And the second is contract consideration. So it is not necessary that it should the consideration should be paid within 6 months. Again, it can be a milestone based payments. If the project is of let's say a 1-year contract and your first deliverable is coming in 7th month. So how is this is a valid? I don't think that third one is a valid like the statement.
Yeah.
Even if you see the first sentence, na, it it consists of all the components. So it's मतलब लाइन ही ऐसी है कि सर वो लग रहा है कि आंसर ही यही है वो.
That's very good. You're getting the hint of right option. But when we are studying at that point of time, at least we should evaluate why the wrong answer is wrong, so that when you are hitting a right answer, you will be confident, yes, this is right, and why this is right. So if you see the second option, they're saying the entity's legal counsel has approved. So there is no mandation for any contract to be legally approved. So it should, like if you see the term of the contract, both the party should be having a capacity to enter into a contract, and the contract must be a legal consideration and it should not be illegal. So there's no mandation that it must be reviewed or approved by the legal counsel, right? Hence the second point is not correct. Third point, if you see, it's completely based on mutual understanding among the party what the payment terms they want to be. It cannot be always 6 months or more than that, right? So this should not be a mandatory condition of any contract. It depends on mutual arrangement and agreement between the parties. Make sense?
Yes, sir.
Okay, so last question of the day. The FASB revenue recognition guidance for the contract is intended to improve US GAAP by providing more useful information to the financial statement user through improved disclosure requirement, removing inconsistency from the existing requirement. What is the objective basically? If you remember, like very first slide.
Yes, very first slide. So उसमें दोनों ही थे, removing inconsistency and providing more information regarding the financial statement.
Everyone agree?
Yes, sir.
Okay, so we are done with step 1, right? We are done with the overview of revenue recognition standard and the step 1. So maybe I think rather than going to step 2, because that's a bigger one, we can take a hold over here. In next class, we'll cover this step 2, 3, 4, and 5. Right? So we can take a hold over here rather than jumping into new topic, because otherwise it will be kind of overwhelming. So I'll send you all these notes, and I'll send you this notes with update in the answer, this points which I have some typo error. So the homework for you for this week is go through this revenue standard notes which I'll be sharing with you, and try some question on the step 1 point of view, right? So that's a very small homework you have for this week, and then from next week onward, you'll be getting at least like 2-hour homework for each day.
Sure, sir.
Cool. Okay. Enjoy rest of your Sunday, guys. And I'll send you the notes tonight, and then you can take a look.
Sure, sir.
Thank you, sir. Good.
Cool. Have a good
Thank
day.
Thank you, sir.
Bye.